Hello everyone, welcome to Sound Money. In today's video, I am not going to give you any fluff and I won't beat around the bush. We're going to talk about something huge, something big enough to be written into the annals of financial history. I believe that right now, whether you are having your morning tea or taking a walk in the park, as long as you've been following the financial news, you must be feeling the same way I do, excited, yet with a tiny hint of disbelief. Can you believe it? Just last night, the price of silver was like a suddenly ignited rocket, and with a whoosh, it broke through the $102 mark. Friends, that is US dollars, a solid US dollar quote. Think back. We've been on this journey for years, watching it crawl up from 20 or 30 bucks, slowly to 50, 70. And back then, we were still having our doubts. But now, it has broken 100. This isn't just a rise anymore. This is practically flying. This market wave, some are calling it a heaven, sent fortune that has finally come to us holders. But others are starting to panic, saying it is a trap set by the big players, the final fireworks. Today, I want to use this video to completely break down the logic behind this for you all and explain it thoroughly. Whether you are holding any or not, today's content will give you a crystal clear view of your future path to wealth. All right, let's get started. To be honest, staring at the market charts these past 2 days, my heart has been like a stormy sea. I just couldn't calm down for a long time. Let's pull back the timeline a bit and recall the emotional journey of the past few years. This is very important for us to understand the current market situation. Do you still remember back in 2023 and 2024? Back then, gold had already started to move, and the price of gold was soaring all the way, repeatedly hitting new highs. But what about silver? Silver at that time was like a lion that hadn't woken up. You could even say it was a hopeless case, just lingering between $28 and $32. Back then, when I was walking in the park, old friends would often grab me and ask, "Aye, but is he? Aye, come, is he? Still lying on the ground? Did I buy the wrong thing? Is it hopeless?" Indeed, silver during that period was a real grind. When it rose, it was sluggish, like a turtle crawling. But when it fell, it was fast like a rabbit, making people love and hate it. A lot of friends just lost their patience during that volatile period and threw away the precious chips in their hands. Looking back on it now, what a huge pity that was. But, as we often say, the market is always born in despair, rises in hesitation, and dies in a frenzy. The script took an earth-shattering turn in the fourth quarter of 2025. That is, at the end of last year. Do you still remember that exciting moment? When silver finally broke through $70, half the people in the market were yelling, "It is too high, too high. A correction is coming, sell now." But you know what? It took a little breather and then continued its attack upwards. By the time it shot past $80, the voices of those who were bearish got quieter, and they started to doubt themselves. By the end of last year, the price of silver shot straight up to $83.97, setting a new periodic high. That is when everyone suddenly realized it turned out that this time, silver wasn't gold's sidekick. It was going to be the main character. It was gathering strength. It was charging up a special move. Entering 2026, and it is only January. The market action is so fast you don't even have time to blink. Let's look at the calendar. The 14th of January. Spot silver broke the $90 mark for the first time, and the media was already going crazy. But who would have thought, just 9 days later, London silver and New York silver both smashed through the $100 psychological barrier, a single-day gain of over 6%, up 13% in a week from the start of the year until now. In less than a month, the gain is approaching 40%. What does this mean, friends? This means if you invested $1 million at the beginning of the year, it has already become almost 1.4 million. Now, this kind of speed in traditional financial markets is simply unbelievable. What does this remind me of? The famous Hunt brothers silver manipulation case in 1980. Back then, under all kinds of crazy speculation, silver shot up to $50. That was a legendary moment in history, but I have to tell you all, that time was speculation. It was man-made manipulation, so it crashed hard later on. But this time, in 2026, the situation is completely different. This time it is market-driven. It is a release of long pent-up energy. It is a fundamental change in the fundamentals. Let's look at a key indicator, one that I often mention to you all, the gold to silver ratio. Simply put, it is the ratio of the price of gold divided by the price of silver. This number, for the past few decades, has consistently been above 70, 80, or even 100. In other words, in the past, 1 ounce of gold could be exchanged for 70 or 80 ounces of silver. But on the 16th of January, this ratio dropped below 50, hitting a new low in 14 years. It is still going down now, approaching the low 40s. What does this mean? This means that in the eyes of the current capital market, silver's explosive power and its room for a catch-up rally have far surpassed gold's capital is frantically flowing from gold to silver to fill this value depression. This isn't a coincidence. It is the result of global smart money voting with its feet. Those friends who have been following our channel's line of thought since last November, insisting on buying the dips in dollar cost averaging into silver, are probably laughing in their sleep now, feeling secure. But for friends who are still watching from the sidelines, or those who don't have much in hand, the biggest question now must be, it is at $102. Is this the ceiling? Can I still chase it? Will I get trapped at the peak as soon as I buy? Don't rush. We first need to figure out who exactly is pushing silver's run. Only by understanding the driving force can you understand the trend. Many friends will ask, isn't this rise just too absurd? Is this just speculation? I have to tell you all, what capital market is free from speculation? However, to sustain such a large and long-lasting rally, you can't do it with speculation alone. This time, silver's explosion is the result of its two wheels, financial attributes and industrial attributes, turning at the same time and turning incredibly fast. Let's first do a deep dive on the first wheel, its financial attribute. In other words, the value of silver as money, as a safe haven asset. Just look at the world right now, to be honest. It is really not peaceful. We won't talk about politics. Just look at the economic environment and the geopolitical situation. There is a war over here, sanctions over there, trade barriers are getting higher and higher, and the globalized supply chain is breaking down. This kind of uncertainty has filled all the money in the world with fear, all of it wanting to find a safe place to hide. In the past, everyone thought the US dollar was the safest, and us bonds were the most stable. That was the belief for the past several decades. But what about now, my friends? Take a look at the economic data from over in the US. Inflation is like chewing gum stuck to the bottom of your shoe. You just can't shake it off. Prices remain high, and the cost of living for ordinary people just won't come down. To fight inflation, the Fed raises rates, lowers rates, messing around back and forth. But the scale of America's debt is like a snowball rolling bigger and bigger. So big it is terrifying just to look at. In this situation, everyone's trust in the US dollar bill, to be honest, is slowly declining. Just like the famous foreign analyst Chris Vecchio said, the US dollar no longer possesses the kind of absolute fundamental trust it used to have. This isn't my opinion. It is the consensus on Wall Street, whether it is big institutions, central banks, or even us ordinary folks. Everyone is panicking inside. Everyone is thinking, if one day paper money depreciates to the point it is like waste paper, what will I have left? So people start looking for those things that are solid, tangible, that you can see and touch, things that have been recognized by humanity for thousands of years. And that is precious metals. Gold is, of course, the top choice, but the problem is the price of gold has already skyrocketed. Thousands of dollars an ounce. For a lot of small and medium-sized capital, or for those looking to make big gains with a small investment, the barrier to entry is too high, and the upside seems limited too. In comparison, silver has become the best outlet for safe haven funds. Silver has two very attractive features. First, like gold, it is constitutional, level money. It has been money for thousands of years. Second, its price, compared to gold, is just way too accessible, way too cheap. So, when big money wants to hedge risks but finds gold too expensive, silver becomes the only choice. In the past 2 years, we've seen a very clear trend. While global central banks are buying gold, they have also started to quietly hoard silver. Even the central bank of a major country like Russia has publicly announced that it is including silver in its national reserves. This is a very strong signal, friends. This means silver is returning to its monetary status that it has held for thousands of years. It is no longer just an industrial raw material. It is a national-level strategic reserve asset. When the tide of currency floods, silver is that Noah's Ark. This is the first core driver pushing silver prices up. The distrust in the paper money system and the craving for physical assets. If you think the financial attribute is just a story, then the second driver I am about to talk about is real, hard data. This is also the most central, most hardcore pusher of this market trend. Its industrial attribute. What did we used to think silver was for? The older generation might think silver is just for making a silver bracelet, a silver necklace, or a silver bowl and chopsticks to test for poison. Those who know a bit more would know that old camera film required silver nitrate. But times have changed now, friends. You got to update your perspective. If we still look at silver with an old mindset, then we really won't understand this rally. Silver today, what is it? It is the blood of the high-tech industry, the vitamin of modern industry, and the bones and sinews of green energy. Why do I say that? Because silver has a physical property, one given to it by God, that no other metal can replace. It is the metal with the best electrical and thermal conductivity in nature at room temperature. Bar none. Copper can't beat it, and neither can gold. In this technological era that values efficiency and speed, good conductivity means high efficiency, means less heat generation, means strong performance. Just look, what are the 3 hottest trillion-dollar level tracks globally that are seeing the most capital inflow right now? First, green energy, especially solar photovoltaics. Second, electric vehicles. Third, artificial intelligence, AI. These 3 industries, all of them can't do without silver. They are like vacuum cleaners, sucking dry the world's silver inventory. First, let's have an in-depth chat about solar energy. Looking around the globe, solar panels are being laid out everywhere. In order to desperately generate power, to achieve the goal of carbon neutrality, the technology of solar panels is upgrading like crazy. The old technology was called PERC cells, and now there is a complete shift to the more efficient TOPCon and HJT cells. I won't get into overly complicated technical terms. Everyone just needs to know one thing. These new technologies are good, they generate more power, but their consumption of silver has increased multiple times over. The surface of every single solar panel needs to be printed with a layer of conductive silver paste to collect the electric current. Without this silver paste, a solar panel is just a piece of waste glass. As the global demand for green energy explodes, the installation of solar panels is growing exponentially. This demand for silver is simply a bottomless pit. And the most crucial thing is, the silver used in these solar panels is very difficult to recycle. Basically, once it is used, it is gone. This is consumptive demand, not investment demand. Now, let's look at AI, artificial intelligence. I don't need to tell you how popular AI has gotten in the last couple of years, right? Everyone just sees NVIDIA's stock price soaring, just sees all sorts of chatbots. But have you ever thought about what AI computation needs? It needs massive data centers. It needs supercomputers. It needs huge amounts of power support in these high-precision electronic devices, in those high-speed transmission connectors, in the cooling systems. Silver is the key material for ensuring stable signals and efficient heat dissipation. The servers, switches, and relays in data centers, every single node needs silver contacts. If you use copper instead of silver, the resistance is higher, it generates more heat, the computing power can't ramp up, and you might even burn out the machines. So, for the tech giants, no matter how expensive silver gets, they have to use it. Because it is an absolute necessity, irreplaceable finally. There are electric vehicles. As everyone knows, an electric vehicle is just a big electrical appliance. A traditional gasoline car might only need 20 grams of silver for its electronic circuits. But an electric vehicle, especially the modern ones with smart driving, uses 2 to 3 times as much silver as a traditional car, or even more. The battery management system, navigation screen, radar sensors, autonomous driving chips, which one of them doesn't need silver, as the penetration rate of electric vehicles gets higher and higher, and the streets are full of them. The consumption of silver for this is also enormous. According to the authoritative forecast from the Silver Institute, by our current point in time, 2026, just these industrial demands alone will account for over 60% of the total demand for silver. And this percentage is still climbing. What does this mean? It means that silver is not just an asset you can keep in a safe. It is also a raw material that is consumed in factories every single day. Data from Baocheng Futures also shows that in 2025, the industrial demand share has already reached 60%. This is why I say this isn't just simple speculation. It is a value re-evaluation brought about by industrial upgrading. This is an essential demand, a rock-solid demand. As long as humanity wants to develop technology, pursue green energy, and use AI, we must buy silver. This is the most solid foundation behind the $102 figure. Outright, we've talked about how strong the demand is. So some smart friends are bound to ask, since there is such a shortage, why not just produce more like other commodities? Just mine more and sell it. Wouldn't the price come down? Hey, that is a great question. But this is precisely the trickiest and most frustrating problem in the silver market right now. The supply side has a huge problem. We need to understand mining isn't like growing vegetables. If you grow some greens, you plant the seeds today, and you can harvest in a month or so. What does opening a mine entail? From prospecting and discovering a vein, to doing environmental assessments, to applying for licenses, to constructing the mine, and finally digging out the rock to refine it into silver. This cycle takes at least 3 to 5 years, and at most 7 or 8 years. In other words, even if the price of silver shot up to $100 right now, and mining companies wanted to expand production, that would be something for 3 to 5 years down the road. Distant water can't put out a nearby fire. Moreover, there are 3 very harsh realities to this. First, nature's gifts are finite. Many of the world's old, established silver mines, like the big ones in Mexico and Peru, have been mined for hundreds of years. The grade of the ore is dropping sharply. What does that mean? It means that in the past, if you dug out a ton of rock, you could refine 500 grams of silver from it. Now, if you dig out the same ton of rock, you might only get 100 grams. What does this imply? It means costs have gone up and output has gone down. This is an irreversible process. Second, this is the most special thing about silver globally. Only about 20-something% of silver is mined from dedicated silver mines. So where does the remaining 70+% come from? It is a byproduct that is dug up incidentally when mining for copper, gold, or lead and zinc. This leads to a very awkward situation. The production of silver is very difficult to control independently, even if silver prices skyrocket. Now, if the global economy is doing poorly and the demand for copper, lead, and zinc falls, then mines won't start operating to dig for copper just for that little bit of silver. Therefore, silver's supply elasticity is very poor. You can't just increase production whenever you want to. Third, inventory depletion. This is currently the most hidden, but also the most dangerous signal in the market. In the past few years, because silver prices were low, people didn't value it much. A large amount of silver was used up in industry, and the recycling rate is very low. This has led to the global silver market being in a deficit state for 5 consecutive years. Data shows that in 2025, the global silver supply will be approximately 32,100 tons, but demand will reach 35,700 tons. This gap in the middle, several thousand tons, is being filled by dipping into reserves and consuming inventory. Right now, the visible inventories of the London Bullion Market Association, LELMA, and the New York Mercantile Exchange, COMEX, are at historic lows. Some of my friends who do physical trading told me that the market currently has prices but no goods. If you are holding cash and want to buy large amounts of physical silver bars, you often have to get in line and even pay a high premium. This physical squeeze on the supply side gives the longs tremendous confidence because they know the shorts don't have the physical goods. If a short squeeze happens, the shorts won't be able to produce the physicals for delivery, and then they'll have no choice but to let the price rise. After analyzing the background and logic, I believe the question everyone is most concerned about has arrived, and it is also the most practical question. It is already at $102 now. How much more can silver rise? Where is the ceiling? Is it too late for me to get in now? Regarding this question, right now, the analysts on Wall Street and around the world, you could say it is a battle of the gods. Their opinions are extremely divided. I have divided them into 3 camps. You can all use this as a reference and see which camp's logic you agree with more. The first camp is the radical optimists. The representatives of this camp are Solomon Global's analyst, Paul Williams, and also that famous economist, Jim Rickards. They believe the good show has just begun. And this is only the first act. The target price they've given is $120, and some are even calling for $200 by the end of 2026. Their reasoning is very simple and blunt. If gold can rise to several thousand or even tens of thousands of dollars, it is only natural for silver, as its brother that has been severely undervalued for decades, to catch up. On top of that, the industrial deficit can't be solved in the short term at all. The demand from solar and AI is still accelerating, and the supply-demand conflict will force an epic short squeeze. In their eyes, $102 is just halfway up the mountain, or even just the starting line. They believe humanity is redefining the value of silver. The second camp is the cautious prophet. Takers, this camp is represented by veteran trader Chris Vecchio. Although this old chap is also bullish on silver long term, he recently made a move, closing out most of his long positions to secure his profits. Why? Because it rose too fast, friends. It is up 40% in less than a month since the start of the year. That speed is indeed a bit scary. No asset can only go up and never down. What goes straight up usually comes straight down. They worry that there will be selling pressure from profit taking in the short term. The price might fluctuate violently and even pull back 20% to wash out the floating chips. Their argument is, I am not going to earn the last copper coin. Let's secure the profits first and then get back in after the pullback stabilizes. The third faction is the steady and neutral one. This is also the view I tend to lean towards. They believe that as long as geopolitical tensions persist, and as long as the development of green technology doesn't stop, the long-term trend for silver is upward. There is no doubt about this. However, in the short term, everyone needs to keep a close eye on a few key levels and not be reckless. On the technical side, the $85 level below is a crucial lifeline. This was a previous breakout platform, and honestly, the cost basis area for a lot of long-term capital. As long as below this, the overall trend isn't broken, and the area around $95 is a strong short-term support, which is also the position of the weekly moving average. As for the upside, whether it can hold firm in the $100 to $105 range is the key focus for this week's observation. If it can hold firm, it will open the door to $120. If it can't, it might oscillate within this range for a while to digest the profit taking. So my view is bullish in the long term, be prepared for shocks in the short term. After talking so much theory for these last 10 minutes or so, I want to have a heart-to-heart with our channel's family members and give some solid, practical trading advice. We are all people who are getting on in years or have some life experience. We invest to grow our assets and make our lives more prosperous. We can't, out of a moment's impulse, just gamble away our retirement savings or our children's education funds. This thing, silver, is not like gold. If you could say gold is the steady big brother, then silver is the lively young person, or even a runaway horse. Its volatility is extremely high. A 10% swing in a single day is commonplace in the silver market. So facing the current price of $102, I have 3 survival rules to give to everyone. Please take out your little notebooks and write them down. You must remember them well. Rule 1. Never have a FOMO mentality, which is don't blindly chase highs. Watching the price go up every day, the news reporting on it every day, friends around you all talking about it, you start to feel antsy, afraid of missing the chance to make money, feeling like if you don't buy now, it'll be too late. This is human nature, and I totally get it. But going all in to chase the high at an all-time high is extremely risky. If you don't have a position right now, absolutely do not impulsively throw all your funds in. No matter how bullish you are, you must enter in batches. For example, use what we often call the pyramid strategy to build your position. Buy a small initial position now, for example, with 10% or 20% of your funds. If there is a pullback, when it drops to 95.90, then slowly add a bit more. If it just moons, then you at least have some on hand. Your mindset is stable, and you'll be happy making a small profit. If it drops, you still have plenty of funds to add to your position and lower your average cost. Never go all in one go. That is gambling. Rule 2, strictly control your positions. Stay away from high leverage. A lot of the viewers on our channel are the conservative type of friends. With the current price fluctuations, if you go play with futures and use a few times or 10-something times leverage with just a slight pullback, your principal might be gone. For us regular investors, actually holding physical assets or participating through legitimate banks' paper silver or ETFs, your mindset will be much better. Don't forget, as long as the green mountains are there, you don't have to worry about running out of firewood. This market trend is a marathon, not a 100-meter sprint. It is a competition of who lasts the longest, not who runs the fastest. If you are buying physical goods, put them in a safe. If the price drops, just treat it as an heirloom. And if it rises, cash out. Only with a mindset like this can you make big money. Third point. Pay attention to those hidden costs. Physical silver is in high demand right now. I've been to silver shops and asked, and the premium on many silver bars is very high. For example, if the converted international spot price is 100, they might sell it to you for 110 or even 120. This is when You have to do the math, or else when the silver price goes up, all the money you've made will be eaten up by handling fees and premiums. If it is for short-term speculation, the transaction costs for ETFs or paper silver might be lower, and the liquidity is also better if it is to pass down in the family or for peace of mind. Then buying physical is no problem, but you have to shop around and find a reputable dealer. There is another small indicator everyone can keep an eye on, which is the RSI indicator, Relative Strength Index. If this indicator goes over 85, it means the market is overheated. At this point, even if you don't sell, definitely do not buy. If the gold-silver ratio continues to fall, going below 45, then that means silver might be a bit expensive relative to gold. At this point, you can consider swapping some silver for gold to strike a balance. This is called a dynamic balancing strategy. All right, friends, time really flies. And I've chatted with you all so much without realizing it. To sum up, silver breaking through $102. This is truly a milestone worth commemorating. It marks the precious metals market entering a brand new chapter. Behind this is the wavering credibility of the US dollar, and honestly, the essential demand from technological development. This is a microcosm of a great era, and we are all witnesses to history. But on this path of investment, even though the scenery is beautiful, you also have to watch the path under your feet. The target of $150 might not be a dream, but the road to that target will definitely have bumps and storms. I hope everyone can remain rational and make decisions based on your own risk tolerance. Securing your profits is more important than chasing huge gains. What we are pursuing is a rich and golden life. It is wealth with peace of mind, not numbers that make your heart pound with fear. Whether it goes up or down, maintain a calm mind. Life is what is most important. Investing is just to make life better. Don't put the cart before the horse. The purpose of our Sound Money channel is to help everyone safeguard their own wealth in these changing times and live a secure and prosperous life. Making money is important, but sleeping soundly is more important. All right, that is all for today. If you feel that today's in-depth analysis helped you see through the fog of the market and put your mind at ease, please don't forget to give me a like. That is the greatest encouragement for me. Please also subscribe to our channel and share this video with your friends who are also worried about their retirement savings. We will continue to be here to be the lighthouse on your path to wealth, helping you keep watch through every storm and surge, no matter how the world changes. I hope everyone can eat well, sleep well, and be able to laugh. I am your friend. We'll see you in the next video. Wishing you all peace and safety.